on the bankruptcy for years for leadership
Reaction to
denied, saying no, they're really secretly trying to take you down. I hate to think of in 2025 on their own.
Crypto World's Jordan Smith spoke with Mike Belshie, CEO of BitGo, about its role in the FTX distribution plan. They also talked about Belshie's outlook for crypto in 2025.
All right, Mike Belshie of BitGo, thank you so much for being here. I want to start with the news from FTX. We have that reorganization news that we found out yesterday. The filing said that there will be a distribution of assets that will begin on January 3rd, and BitGo will help with that initial distribution. That's expected to take up to 60 days. Tell me about your role in that process and how you expect it to unfold. I mean, there are obviously billions of dollars in assets expected to be moved around. Tell me what you're doing.
Almost there. Good to see you again, Jordan. Thanks for having me. Look, I mean, the FTX, debtors have done, I think, a great job of moving swiftly through this process. You might recall that Mt. Gox just concluded its distributions a couple of months ago, and that was from a hack that happened 10 years ago. So kudos to the FTX team for really figuring out how to move swiftly. We've been working with the FTX team, pretty much since the bankruptcy. We didn't have a relationship with the prior management, but when John Ray took over, they immediately recognized a need for safe custody of the assets at an institutional grade. Obviously, there was a lot of assets coming out of FTX, and so we've helped store those for the last couple of years. And then as they move into this next phase, they're getting distributions back to their clients. So BitGo has been building for a decade now, institutional grade services, and it starts at the bottom layer with wallets and custody, and on top of that, you've got staking and trading and lending and borrowing and things like that. And up until now, for the most part, that's been an institutional service. But we don't think that retail users should be denied institutional grade quality. We've got the deepest order book. We're not a single exchange. We trade on all exchanges. And so we're able to kind of bring all of that. We're happy that FTX thought we could be a good venue for the retail clients from FTX coming over as well.
I want to go back to something you said. You talked about Mt. Gox and the distribution that happened there. That did take some time, and we also saw, as that distribution was happening, an impact on markets. And many are concerned about the impact that this distribution would have on crypto markets. Do you have any expectations there as to what we could see happen with the price of Bitcoin or other assets as this distribution gets underway?
Well, it's interesting. The Mt. Gox distribution was a distribution of the digital assets. So they were distributing, Bitcoin back. And then if there was an impact, it was certainly temporary, but that was distributing Bitcoin to people that have been denied it for 10 years, and some of them sold it. In this case, the distribution is cash. So actually, this should have a positive impact on the market, if anything, where some of those investors who have been out of the market are now getting cash back, and so then they can re-enter the market. Nice. So we hope to see a lot of that. But regardless of what happens here, the market is much bigger than just a few $1 billion. So if there is a small impact, it will quickly kind of get absorbed in. Markets will return to where markets see the price, not a temporary impact of any one distribution.
If we can talk about that next iteration of crypto adoption, I think the big story so far has been Bitcoin ETFs that are trading right now. And I'd love for your reaction to the growth of those this year and what it's meant for your business, because as a custodian, you are involved in some of the ETFs. So I just want your reaction to what we've seen in 2024 before we talk about 2025.
Look, I think it's well known and old news that the Bitcoin ETFs have been the fastest growing, fastest adopted ETFs in the history of ETFs, which is pretty remarkable.
Who's laughing now?
And I think that shows that there was a tremendous amount of pent up demand to have a regulated product that you could trade through your traditional broker. And so that's grown quite well. And it's been very good for the industry. It allows a number of institutional players that were plumbed into the equities markets to be able to participate with Bitcoin. Whereas if they were otherwise trying to touch Bitcoin, they had to figure out on their own, okay, how do I hold it? How do I custody it? How do I trade it? All these types of things. And the equities market kind of streamlines all that. Now it comes with some risks because you actually don't own the Bitcoin directly. How? The markets only trade Monday through Friday, 9 to 5 banking hours, right? And if you want to have real-time access, if you want to be able to use that Bitcoin, maybe you want to use it inside of collateral for another loan or something like that, the ETF product doesn't quite work as well. All right, ETFs for Bitcoin, they're there. For Ethereum, they're there. Other coins, not quite. It's a great way for institutions to start getting their feet wet. And then I think the next phase is really about making it so that institutions, companies, of course, individuals can feel comfortable touching the asset directly and knowing that they have service providers, they have custodians, they have trading and access to liquidity. They can use that money to get yields through a number of different ways. So being able to use it as a full financial product as opposed to just having ETF shares.
Regulation is a big part of the roadmap for 2025 too, and how it will impact crypto businesses across the board.
Ladies and gentlemen,
from your perspective, what's the priority for this Congress that looks a lot more open to crypto rulemaking next year? And are you having any conversations with lawmakers about what those priorities are?
So we talk to both regulators and lawmakers all the time.
Obviously,
it's a really exciting time because finally we're able to have interesting conversations instead of conversations where they're really secretly trying to take you down. So all of a sudden, service providers like BitGo, we are all able to move forward with a lot more confidence. This will also reflect into the traditional financial space, so we will see more of our traditional Wall Street players coming into the market. Additionally, with the U.S. just being more open, regulators around the globe have been looking for leadership and guidance from the U.S. And when that leadership and guidance last year was saying no, worldwide people were saying no. So generally, it's opening up. Now, in terms of what legislation is needed, it's a good question. I mean, I hate to say I agree with Elizabeth Warren, but there's one thing I do agree with her on, which is all I want is the same rules applied to digital assets as would be applied to other types of assets. And I think that may be the best prescription, frankly. To that end, if you break down regulation, it kind of comes into three categories. You've got law enforcement related things. This is like AML protections, sanctions controls, transaction monitoring. We already do that better than traditional finance has ever done it. And that's because we're technology first. It's also evidenced by the fact that the largest fines in banking all are hit against the traditional banks doing their AML KYC, doing their sanctions controls, and yet still making mistakes. So that's not an issue for crypto and never has been. Same rules work just fine. The second area is investor protection. The SEC has heretofore been unclear as to what's a security and what's not. So a number of people that are providing new tokens are saying, hey, can you clarify that and help us get on the right track? I think the SEC is now going to have a real interest in solving that problem, and things will move forward. And then the third area is kind of market structure. So market structure for securities, there's one that exists. If any of these tokens are securities, we already know how to trade it. We don't need anything new. For derivatives, we already know how to do that as well. For things that are just commodity spot markets, there's nothing actually needed here. So I think
roasted.
In 2025, we get to start hitting the ground running, knowing that if there are concerns from regulators, if there are things that need to change, they're going to reach out to industry. They're going to help get the right rules and regulations in the right place. And we won't be just facing massive lawsuits and things like that.
A final question real quick. What about looking outside the U.S.? I mean, BitGo has launched a global platform this month, and you previously launched a new home base in Singapore. How much is global expansion on your roadmap in 2025? And does that growth have anything to do with the regulatory situation in the U.S., or do you see it more as just opportunity abroad?
Over the last couple of years, it has been in part, hedging in case the U.S. couldn't figure out a reasonable plan forward. But it's also been part of a broader strategy. Look, we have 7 licensed custodians around the planet today. We hit all of the major geographies from North America to Europe to Middle East to Asia. And the initial goal is just to be able to service lots of clients, right? And this is a global currency. But what's happening right now is we are building a global financial system.
It's the
we've
biggest
never
piece
had
of
one
dog
before. This is in part why regulators are so stymied. They haven't actually had to think about how to get standardized rules that work across borders everywhere. So instead, we've got silos where every nation kind of has their own set of rules. With the global financial system, you will finally be able to pay your vendors in India, in China on a Sunday night, and get the money to them by Monday morning so that they can start manufacturing or doing whatever they're going to do without having to go through all of these hurdles. And it's going to take some time. But the reason we're building all these custodians is we can now connect them. So BitGo does a lot of settlement. You might have heard of the Go network, which is where clients of BitGo, you can have one that's connected through BitGo Germany. All of their assets stay in Europe. They never leave Europe. They're settling with a client in the US. All of their assets stay in the US and never leave the US. But those two parties can now trade together by way of this Go network. So as that global financial system emerges, We're building the connectivity so that you can trade from Asia to Europe, to the Middle East, to the US.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.